Welcome to the Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, October 3rd, 2025. S&P 500 currently sitting at 6738. I'm David Zarling. I'm here with Ian McMillan. We made it to October, Ian.
Made it to October, 9 months. Checked off.
Yeah, 3 quarters, 9 months. Always seems to go quick. Be Christmas before you know it.
It'll be Q1.
Yeah. I mean, you already have Halloween costumes for your kids. You already got Christmas presents too?
No Christmas presents. No Christmas presents yet.
Okay.
I mean, do we know if we're going to have, if this market doesn't keep it together, there'll be no Christmas. But
Sorry,
the kids know that. The kids know that. And that's why they keep up with what the S&P's doing.
See if the S&P's been naughty or nice.
Yeah.
It's fair. I get it. Plenty to cover this week. I mean, another all-time high on the S&P 500 and several other indices.
Go figure. I mean, who would have thought in an uptrend with a slew of new all-time highs that we just keep on getting them?
I mean, small caps using IWM trying to record a new all-time high, Dow Jones. We talked about the S&P, even international stocks.
Using internationally. I know the Nikkei had a big month.
Yep. Not too
DAX
shabby.
DAX looks pretty healthy. Sideways for the last, sideways since May, but healthy.
I mean, I even think of Russell 1000 equally weighted. New highs. Not bad. Market leader like NVIDIA.
Yes. NYSE composite, new highs.
Highs all around. Except for mid caps. I don't know why they're...
Yeah, mid caps have definitely... micro caps are almost there. Almost back to late 2021. Mid caps, 2025 has been a little lackluster.
Well, I think some of that could be the makeup of things. You know, pretty large weighting in industrials for mid caps, financials, consumer discretionary. And when you look under the hood of those things, broadly speaking, you know, even tech is kind of like your mega cap, and then you've got your digital economy and AI and quantum computing stocks, and a lot of those still fall outside of mid caps. You know, regional banks haven't been great, so
no, they haven't. And then, but biotech's picked it up,
and I'm guessing there's
you've got other spots that very hard for Russell to get it all going in the same direction at once.
And I think, you know, it's worth highlighting. You know, we've been pretty bullish for quite a while on here since the breath thrust in April. I think it's always good to challenge your thesis. So what are some things that you're looking at that...
Gotta be careful. Are you inviting bearish energy?
I am. Come in here, bearish energy.
To our podcast?
Yeah.
Yeah, it's been a good run. I mean, you could have said that at the beginning of August. I do think that, well, I like to phrase it as moving average participation, you know, percentage of whatever constituency that is above a 200-day moving average. So that's been kind of diverging since, what would you say, Dave, beginning of August?
Yeah, beginning of August.
Okay. Decline lines were strong. They haven't, other than the S&P, they really haven't been that great over the last few weeks. So we'll see if that means anything. Again, I mean, you go back in history and sometimes these things go on for months and months and months, or they get fixed.
Yeah, I think it's safe to say the last 2 or 3 months, you have these divergent advanced decline lines. You talked about percentage of stocks above 50 and 200-day moving averages. Then you look at the fact that both the S&P and VIX are up. That's typically not what you see. both since the end of August. Triple C credit spreads up since the end of August.
Yeah.
Junk bonds versus intermediate bonds, no new highs since July. And so that you just have to put that in a thesis out there. And really, these things only resolve themselves basically in one of two ways. Either we get a broad market correction. Now, I want to be clear. When I said correction, I don't mean it has to be minus 20, but you could get a -5 to -10 to
And a lot of
resolve
things
these.
are going to be down -20 if we get that.
Or we get breadth expansion the opposite way, and the rest of stocks pick up, VIX cools off, credit spreads cool off, junk bonds versus intermediate bonds cool off. And I wonder if that's the pain trade, because we've melted up through, we've been strong seasonally speaking. August and September, we're supposed to see some, well, seasonally speaking, could have had some weakness, didn't.
Yeah.
Are people still caught in a way to take advantage of
If you're
this?
underweight, then like you got to buy. And I thought about that, right? So if you're in that position, how far do you wait? So let's say your market's dripping, you need more equity exposure for your clients, right? I mean, you can't really just, I almost feel like it's a self-fulfilling, you can't wait for the 5% correction. Because what if that never comes? And so just like all these 2% corrections have gotten scooped up so quickly over the last couple of months.
Yeah,
Because you got to get in there. Any sign of red, that's your chance to get a little bit of it back against the S&P. But then because of that behavior, you never get, a decent 5-10% correction.
yeah.
Eventually that you only have enough gunpowder to do that for so long. And I'm not saying that's the only thing that's happening.
And you wonder if it's still 1 foot out the door, right? So if you're not heavily allocated and you do get a 7% correction, are you in mental purgatory? Because you're like, see, I was right. That's why I wasn't heavily allocated. And so therefore you don't get involved then when you should be. So I think there's quite a few allocators out there who might be in a really tough spot right now with this market melting like this. That doesn't mean a 5, 7, 10% correction doesn't happen. I mean, October is notoriously volatile. We just highlighted all the potential red flags. You could still get that, but I wonder if we do get that, do we see put call ratios jump again, people getting heavy short, and it starts the process all over again?
That seems to be the MO.
You would be doing that. I mean, since 1950, the fourth quarter is up 80% of the time with an average return of 4.2%. It's the best quarter in a calendar year.
Yeah,
and
you definitely want to be involved. Tip usually. Now, were those better years because we got some weakness in August and September?
Right. That's a great point.
So we actually had a little bit more of a, whatever.
Well, I know
sidelines or
Ryan Dietrich highlighted that 13 of the past 14 times S&P made a new high in September, it was higher in Q4. The one exception.
At the Q4 or just like at some point during Q4?
That's a great question. I'm assuming it's end of Q4, so your kids can have a Christmas.
I'll let them know. They can put 2 things on their list.
And I think it's telling, the worst performing sector on the year, but still positive, is staples.
Good for them.
You're getting new all-time highs everywhere. I shouldn't say everywhere. You know what I mean by that. Yeah. Small caps, Dow Jones, S&P, Weighted Russell 1000, international, your leading stocks, and your worst performing sector, but still positive, is staples. That's risk on. And then you throw in miners, whether they're gold miners, silver miners, crypto miners. What else are you seeing out there? What else you want to highlight for our listeners?
Kind of stuck on this staples chart. It's interesting.
Yeah?
Pretty bad. I mean, short, like intermediate. But maybe that's risk. I mean, because they've been selling staples, which I don't think is really a risk off. I mean, if you're selling staples to allocate to something else.
It's risk off if it's outperforming S&P, which it's not. So they're selling staples, and it's not like they're selling more risk on areas at a faster clip. You compare XLP ETF for staples versus a lot of different risk on areas, and it's underperforming. But yes, the absolute chart of XLP is very interesting. Agree with that.
What else? Yeah, gold, silver, right? So silver versus gold. Interesting. It consolidated there for a little bit, July and August, moving higher in September. Crypto miners. In fact, I was just looking at DAP versus Ripple earlier this morning. Kind of back to, the crypto stocks have looked pretty strong. Your DAPs, your, what's the one WGMI?
Yeah, we're going to make it.
CRPT, they look good. Relative charts look good. Bitcoin, Bitcoin kind of nothing, still consolidating. Oh, well, I take that back.
Yeah, I was going to say,
I hadn't looked at this in the last. Well, I saw where it was back above 117, but yeah, I wasn't aware. Okay, so yeah, we've had another pretty big move in crypto, or at least in Bitcoin. So good. That's good.
Well, you've got Ethereum break out of this range that goes back to 2021, currently sitting at 45.34. I mean, if it can clear 4.888, I mean, that's pretty good look for crypto. Not bad. Dollar still anemic, trade weighted dollar using DXY.
And they're trying to hold it down here. Like if you look at Dixie, we've had a couple of attempts. So, try to get below 96, 97. We'll see. But certainly some also lethargic to the upside.
Right.
So
range bound.
What do you think about, you mentioned earlier, VIX going up and S&P going up.
Mm-hmm.
Does that spook you?
No, I don't typically get spooked. I mean, it's always something you got to pay attention to. If VIX is rising and S&P is rising, those typically don't do that, but that's the same with like any other divergence that can not matter until it does or resolve itself. And things, if the VIX cools off and you see stocks accelerate to the upside, again, I go back to, is that the pain trade? Is there not enough exposure out there, and this market's going to start really moving fast? I mean, we've already moved. What, S&P is up 30-some% since the April lows, so it can't possibly go more. But here we are, small caps just making fresh new all-time highs since 2021. Have stocks really gone too far too fast? Don't know, but I will say I'm not going to be surprised if there is in the next 2-3 weeks some type of 5-7% correction with the VIX doing what it's doing now. Also won't be surprised if it accelerates to the upside. Both scenarios, uptrend would still be intact from a big picture perspective.
Yeah. And I'd also add really this week, yesterday and today, should we close here, you're going to have daily RSI on the S&P. It's going to be back to overbought. We know that is good. I like when things are overbought.
Yeah. Talk to me about that. Some people would hear that term overbought and think, well, that's not good.
We are overbought in May 16th.
Be indicative of overwhelming demand, right?
Yeah. Very, very strong. We were kind of getting a divergence there, but even if we do, I think I don't pay attention to RSI divergences if both of the peaks are above overbought. Just getting overbought in itself, I think, is super healthy. And then sometimes you have these price thrusts where you get like a really high RSI, like 80. And then like, okay, so the next trip, it only gets to 72. Am I really calling that a divergence? Or are we just in a strong market that keeps like with a lot of demand? So I think there's a lot of context to it, but I love to see it. It's just another kind of confirmation of I think you used it earlier, the grinding market we're in.
Sure. And then you got things like aerospace and defense still doing well.
Every day, video games, space and defense, gold mine, the gold and silver miners.
What do you think about consumer discretionary?
Yeah, I got mixed feelings on it because there are a lot of discretionary stocks that look good. I even think ADPV has, I should know this because I just did a monthly update, like 17% discretionary.
Okay.
I'm going to like them. I'm going to like them. You're like your Tapestry. Like, I get it. I get why we have Tapestry. Carnival, although Carnival's gotten hit a little bit this week. Ford, cars look good. That CARZ ETF continues to look good.
It does.
So I get it. But then, and yeah, the XLY, though, kind of a disappointment.
Well, and some of that just have to do with makeup, right? Heavily tilted towards Tesla and Amazon.
Tesla's improved. I think I saw Tesla's up like 100% since Tim Walz was being a funny guy.
Since he was waving. So kind of a mixed bag is what I'm hearing. There's spots in consumer discretionary. Kind of sounds like industrials. Where
as you took the words right out of my mouth. Yeah, she's kind of blah. Like Amazon, Amazon has not gotten to year-to-date highs. Tried to back in early September. Still above a 200-day. It's fine. Relative chart's pretty tough.
Yeah, trying to hold it together.
And then your other, like a Home Depot. I can't remember the last time Home Depot was hasn't been above a relative 200-day. It's a very tough looking relative chart over the last 30 years.
I'd even say 10 years.
Yeah.
Home Depot and Lowe's.
Yeah, Lowe's is rough. Menards isn't publicly traded, is it?
No.
Good for them.
So yeah, and then XLC, communication services.
Yeah, that kind of, it's in an uptrend, relative uptrend, absolute uptrend. Definitely a wonky one, though.
Agreed. Heavily impacted by Google and Meta, and Meta's pulled back here the last 2 weeks. And so you can see how that would have an effect.
It's another sector, though, where ADPV seems to have found a few that worked.
Yeah, speaking of ADPV, I should mention them as the supporter of this podcast. Adaptive Select ETF is listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Through proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. Distributed by Quasar Distributors, LLC. What else, Ian? What else are you seeing out there? It could be tilt sectors, asset classes, topics du jour.
I think it's still pretty rosy out there. Other than that, we'll see if foreign stocks get it going here, like emerging markets or something.
Yeah, there's still pockets out there.
Well, now I'm wondering if I just need
Africa continues to move. Peru, I think you guys touched base on last week.
We did talk about Peru.
Not too shabby. Not too shabby at all. And I know healthcare has been a downtrodden sector, and a leader in that area was Lilly, and that's starting to show signs that that's back in the game.
Lilly,
Maybe demand wants to outpace supply for Lilly, which wouldn't hurt XLV overall.
They need something.
Then a pretty hurt sector. You talk about Staples being a weak performer.
Johnson & Johnson made its all-time highs.
Nice. But what about this government shutdown, Ian? That's gonna crash this market, right?
Yeah, when do they start that? Tuesday? Monday? My life personally has not been affected, so I'm unaware of when it was actually started. Tuesday, I guess.
Government didn't cut off your internet?
No.
Okay.
Market seems to be fine with it. I saw where Spain is their government. Like, and is the government really shut down?
Well, I think a bunch of government employees get furloughed. I remember a time when like the big deal was like national parks were, I think that was during 2013, national parks were shut down, things like that. I don't know what government services are affected.
What about like, do we get our mail?
I guess we'll find out.
I don't know.
But I do know last government shutdown in 2018, 2019, which was like 35 days long, S&P 500 was up 10% during that time.
Oh, let's do that again.
2013.
For even longer.
Yeah, let's do 365. 2013, 16 days, government was shut down. S&P was up 3%. 1995, 96, 21 days, the government was shut down. S&P was up about 0.3%. 1995, 5 days, S&P was up 1.2%. So we'll see. I mean, I'm sure we could go back further in the data and find exceptions, but it's almost like if the rules of the market aren't going to change, market participants like it. So maybe we should have a permanent government shutdown. Maybe our lives would be better.
Let's spook them. I'm all for add some bricks to the wall of worry.
You know those are going to be the sensational headlines, government shutdown, especially if we do get like some 5 or 7% move during that. It'll be Chicken Little and sky is falling. Get that put call ratio up. People trying to short the market again.
Probably worse than all the tariffs.
Ooh, tariff tantrum. Very provocative. Gets the people going.
They know how to do it.
Yep. Aren't they good at sensationalizing the news? Got to sell commercials. Anything else, Ian, before we ask our listeners to give us a high ranking and share this?
I don't. It's not the most rip-roaring. Although, I mean, we were up 3.5% in September. It's a pretty good month.
Yeah.
I mean, you annualize that. That's a lot.
Can you do that? Can you annualize after a good month? Because I feel like that's...
But I think it helps put things in perspective.
Yeah. But I've golfed before, and I've done the whole like, well, imagine if I play the rest of my round like these 3 holes.
Yeah.
It just doesn't happen. Fall baseball. Are you watching any fall baseball, or the Braves are not in it? So
you're such a disgusting person to even ask that. Are you watching fall baseball? No, I'm still sad, Dave. Brian Snitker retired though.
Really?
Yeah.
Okay.
They want apparently, I think the Giants interviewed him too, but the dude from University of Tennessee is getting a lot of MLB inquiries this offseason. Tony Vitello, I think is his name. Younger dude.
Great name.
He's a good coach. I mean, I also, as a South Carolina baseball fan, I would love for him to leave Tennessee. So let's do that.
Let's do that double win. Well, you're always welcome to cheer for the Brewers. Well, you guys have already started your series, right?
No, we start Saturday, tomorrow.
Okay.
They had a bye.
You're going?
I'm going to go on Monday.
Justin's going.
Yeah, we gotta cheer these guys on. We got the Cubs coming to town. That's
Micah going?
serious. Trying to make that work. It's a balancing act between, being up late, school, and varsity sports participation. So we'll get that figured out. Trying to make it happen. He's an RA, so he's got to get some time.
Oh, okay. Yeah.
He's got to figure out his schedule to make it work. But that would be the plan, to get the boys there.
That'll be awesome.
And then I'm trying to decide how I'm going to approach it with them, because I don't know that they've seen Dad cheer on the Brewers, but have they seen Dad cheer on the playoff Brewers? Might be getting rowdy. Might be getting loud.
After a few beers, might be a new introduction.
Well,
I've never seen this side of Dad before.
Yes.
Is Dad taking his shirt off?
Why does he have a Brewers logo painted on his chest? It's for the team. Everything for the team. But yeah, you're welcome to join us. You're welcome to cheer him on.
I might be an honorary Brewers fan for a couple months. Hopefully a couple months.
Yeah, hopefully for a little while here. We would
this town would go crazy. Such a great baseball town. Milwaukee fans are some of the best fans. So that'd be a real nice. And I love that it's rivalry series with the Cubs coming to town. Bring the smoke. Bring the smoke.
That'd be good.
Let's do it. Well, Ian, I appreciate you doing this with me again this week. We do ask those listening, if you appreciate this, share it with others, give us a high ranking. We would love it.
Have a great weekend, everyone.